Alrighty. What is going on, everyone? We're going to be reviewing some ES charts here. We're just going to be breaking down our decided to do it live versus just kind of recording my video and then posting on here. Just wanted to see just kind of how this live stream would work out. If it works out, it works out. If it doesn't. It is what it is. Overall, today was relatively choppy session. Not as much momentum to the upside as I would like to see. However, buyers still remain in control for the most part. I mean, we continue to take out previous daily highs. However, we just have not. I mean, we just not been able to, I guess, have much follow through today. I was more or less expecting us to chop around inside of the previous day's range, basically between 37. Excuse me, basically between 37. Excuse me. Excuse me, sorry. Basically between 37.25 and 47.08, 75 is kind of where I was expecting. This whole range right in here was where I was expecting us to do all this chopping, fill in the volume. However, we did it above the previous day's range. I mean, it's not the worst case scenario for buyers. You definitely would like to see continuation to the upside. We opened with a gap to the upside. I don't know why I just clicked that. We opened with a gap to the upside, and we filled it late in the evening. I actually missed a short. I was even thinking to myself when I seen it push up here, I had a feeling that it was a good short. It was just I didn't know if the risk was worth it, because at the time the target would have been 47.80.75, and you would have been fading the edge against 47.91.75. And prior to that, we had gotten the overnight high. And I just wasn't looking for this market to kind of roll over and then go trend down, where they trapped me later on the short and they grinded me out, and I got stopped out whenever we filled single prints. That hurt. However, the short up here was definitely the better play, because we had gotten the initial balance low, and I guess just the fade to come back into the point of control at the time, which was around 47.80.75, right? You're shorting 88, and you're risking up to 91.75. So, you're risking 4 or 5 points to gain 8 points to the downside. And had you been targeting the lows of the day down here at 69, your risk reward would have been a very, very much a much better trade, to say the least. And then obviously we went trend down, dipped our toe into the upper distribution. Remember, yesterday was a double distribution day. I'll highlight those distributions just to kind of reiterate what those were. And you remember, the single prints act as a gap, an intraday gap in between, and so you would treat each section where there isn't single prints as individual days. So we dipped our toe into that upper distribution, right? You had the lower distribution, the upper distribution, and then the gap in between those two distributions. So we dipped our toe into that upper distribution, and I guess I should have been more cautious on shorting here. It's just I was trying to follow the market generated information at the time, and that's what made this trading day difficult, is because there was mixed market generated information. We gotten the overnight high, and then we come down, we take out our initial balance low, we fill the gap, we go trend down, higher value, right? So there was things in the buyer's camp, and then there were things in the seller's camp. And then both ended up at a stalemate, where we just kind of did nothing on the day. Only end up a few percentage points on the day overall. But we did dip our toe down here, and I guess the better trade, instead of shorting, because like I said, I was going with the MGI, and I was like, okay, let me get short. Let's see what this market really wants to do. Maybe I could scalp out a couple points. And I guess the better trade would have been to take the long when we dipped our toe down here. It's just there was a lot of risk there. And I guess you would have been going against the grain, at a rejection. Maybe instead of risking all the way down to 37.25, we risked the M's low, which is 40. So you're risking 6 points, and then your goal is to potentially rotate back up to point of control, which was moved down later in the day to 72.25. So you're risking, 6 points to make, obviously you're not going to buy the low there, but let's say you're risking 6 points. You buy right around this 50 level, and your target is 72. So you're trying to make 17 points to the upside. You're risking 6, so that's a really good risk reward trade. That would have been the better trade instead of me getting short on the downside here. Going with what the market was telling me at the time in the short term, right? So buyers were, obviously in control in the bigger picture, and I guess I should have just had that in my mind a little bit more, and looked to buy the dip there, considering the fact that we only go trend some 35% of the time. So it's a very highly unlikely, or a highly, excuse my English, Jesus. It's very unlikely that we hold trend, especially when we have value that is higher, and a point of control that is higher. And with everything else that we've got in the buyer's momentum, right? We have the monthly up, we have the weekly up, the daily's one time framing up. So with all those things in context, I guess I should have been taking the long down here versus the short. And if anything, maybe look to short where we filled the set of single prints, maybe scalped out a couple points on the downside versus taking the short where I did, which is what I got short around 51, added 55s, added 58s, and then just got grinded out to the upside where we eventually come back up to the point of control. So anybody that did get long down here, excellent trade by you. Very, very great trade. I got to get my mental to the point to where like I can spot that in real time and then realize, okay, maybe we don't go short. Maybe we look to fill the set of single prints because of the data that we know, right? 35%. It's 35% of the time you hold the trend. So very unlikely that we would, right? The other 70% of the time we don't hold the trend, right? So you're looking to come back and fill the set of single prints to the upside. With all those things I was saying. So it's this year has been a very difficult year for me. Overall, my trading has, I guess, kind of flatlined. I've gotten better, to say the least, more disciplined as far as my trading goes. It's just missing things like that kind of bugged me a little bit. And then maybe not taking or getting stopped or stopping myself out sooner instead of adding on the way up. Those are the things that kind of kill me and have killed me throughout the year, is, not taking the loss early or just cutting the loss when I should. And, just kind of giving away what I made this week. Like this week I was doing really well, and then I give it all away in one day. That's been the theme for me this year, as I've been trying to trade better. That's been the theme. I've just been sucking wind, to say the least. So hopefully this next year, 2024, I'm not going to say I will, but I want to work on being more disciplined in my trades. I got to be more disciplined in my trades. Otherwise, I'm not going to survive in this game. Total this year, I'm down about $3,500 on the year. So, not a positive year, not a massively negative year, but overall, negative $3,500 is not what you want to see. All right. It's just not what you want to see as a trader. So, especially when the market has been moving to the upside. It's been some very difficult trading days, to say the least, but we're just, hoping that my resilience kind of pulls through here, and something starts to click for me, and I begin to do better than what I've been doing. So maybe that means I need to leave this trading group that I'm in. I mean, it's a great group of guys, great trading group. Um, cannot be more thankful for them and all the help that they've given me. But maybe I rely on them too much. Maybe I need to stem off on my own and kind of uh, do my own thing, kind of develop my own strategy and trade what I think, not necessarily what I think, but what I see, and then not taking somebody else's opinion into account. So maybe that's something I need to do going forward as well. Just kind of focus on what I think is going to be the case versus what somebody else is saying. And a lot of times the guys in the trading room, they're correct. Paul, if you guys don't know who he is, Paul Asmar, he's a great mentor, great trader, but his style is a little bit different. It's not necessarily my style, and maybe that's something I need to maybe not lean against so much as trading how he trades versus trading how I trade, or not putting too much emphasis on how he trades. So like when he's looking to get short, maybe I don't need to look to be getting short, right? I just assume because he knows more than I do, he's in the correct trade and the reality is he might not be in the right trade. There are two sides to the market, and I'm not blaming him for my losses. Obviously, everything that has occurred is due to me, but I'm just stating, I shouldn't rely on or put too much weight on somebody else's opinion or their trade like I have been. And a lot of times I do kind of go against what he's doing, or against some other people in the trading room. That's what makes a market. You always got two sides to the market. So enough about my little rant there about my trading. Let's review what we got here as far as our high day and our low day. That's all we go out with. Don't think the point of control was wide enough. Let's count 1, 2, 3, 4, 5, 6, 7 time frames. I think 7 is going to be the max here. 1, 2, 3, 4, 5, 6. Yeah, 7 time frames. So all we go out with in reality is just the day's high and the day's low. Are the buyers getting, long in the tooth? Are they getting winded here? That's something that remains to be seen. Obviously, this market continues to grind higher. There's nothing holding this market down, really. They can and they will continue to push up as much as they want. So, next target on the upside is the all-time high. I mean, we're right next. I mean, only a few more points to the upside and we're at all-time highs. 48.0825 is the all-time high. So if tomorrow we take out today's high at 47.9175, there's nothing stopping you besides the 4,800 round number, right? To get 48.0825. There's nothing, absolutely nothing stopping this market from getting that. However, if we do roll over and take out today's low, which doesn't seem like it, right? Considering how we attempted to go trend down and then bounce rejected out of this upper distribution. We only spent 2 time frames really down in this lower distribution, and most of it was going back up, or the upper distribution, excuse me. And most of it was being rejected out of it. So if we do take out today's low at 46.25, I need to fix that, at 46.25, then we'll come back into an initial 3-day balance, and you'll look to potentially fill in the single prints and then play in this area that I described just a second ago, where we did no volume and spent no time, right? In between that zone. Maybe we chop inside there if we take out the day's low. I'm not saying we're going to, but that is a scenario and a possibility. However, that, like I said, because there is excess at the lows here, meaning we ended one auction and started another, right? We stopped auctioning lower and started the auction up. Maybe we just continue to move up higher, right? Today was a series of lower highs, lower lows. So if we can consolidate throughout the overnight and take out today's high tomorrow, continue to one time frame up, this market could really begin to set new highs on the on the yearly and the all-time high. Now let's go ahead and look at the larger time frame real quick. We'll look at the monthly. Look at the monthly. Just to kind of reiterate, give me 1 second. I'm gonna take a sip here. All right, so we are looking at the monthly. Right? So we are one time framing up on the monthly. Technically 2 time frames in, oh, excuse me, sorry, 2 times frames in a row, but we have only taken out the previous balance or the balance high for 1 time frame. Look at where we're coming into. This area that I have a hard time wanting to get long in, between 47.70 and 48.0825 all-time high. That's because we had a rejection here, rejection there. I'm not suggesting, I'm not saying this is going to happen, but it is a possibility that briefly we may find some resistance, some sellers up here, that did, in the bigger picture, absorb some volume, right? They got into the some positions here, right? They took a couple profits off the table here, caused a little bit of this pullback. They re-enter their or add to their position, right? Now they're all that inventory got absorbed down here. Now looking to be redistributed up here near the all-time high and potentially above that all-time high. That's why I think, that's what I'm thinking in the bigger picture here, right? Inventory was absorbed down here, got distributed, it came down, reabsorbed, got distributed, and yeah, so that's what I'm thinking. It's, we could either distribute or we could find buyers, very strong buyers, and continue to push up higher into all-time highs, potentially the 5,000 level. I think I have, maybe it's not on this chart. I know on one of these charts I have, that's going to be aggravating. One of these charts I know I have a target set for next year. There it is. 51.2850 is my target. Okay. I put that there on November 21st is when I put that target there. We could easily get there in a matter of, just a few days, few weeks. So that is my target on the upside for 2024, 51.2850. I put that there on the 21st of November. So let's see what day that was real quick. Let's look at the daily time frame, just so I can kind of not flex, but just have my brain here. What is the 21st? 11/21. So here on this day here. So since then, we've grinded up 239 points. 239 points since I put that we would get that target of 51.28. And I think I put that on the month, or what where'd it go? Was it on the month? Oh, there it is. Okay. So that's where I had right there. 2024, 11/21. That's what I was looking for. Anyway, sorry, I got a little distracted. Monthly, 1 time framing up. Weekly, very, very healthy. Continues to 1 time framing up. In yesterday's video, I discussed how it was 7 weeks ago since the last time we took out the time frames low. 7 weeks. We've been 1 time framing up 1, 2, 3, 4, 5, 6, 7 weeks in a row. Is the weekly getting stretched out? That's a question, right? We got to ask ourselves that question. I'm not saying that this market's going to roll over and we're going to set lows, but you do have to be cautious. Is the market getting too long? We just got the monthly up. So, anybody that was short in the larger picture could be fueling the push higher here. And whenever that stops at some point, it's going to be up to the short-term buyers which we know how they trade a lot of the times. They're weak-handed to hold this market up whenever all that short covering and underlying bid steps away for a little while. So we could get a continuous grind to the upside until we hit the all-time high and get it slightly above it. But I am being cautious because it's been quite some time since we had a 7-week run. When was the last time we had a 7-week stretch of just straight highs? This one was 1, 2, 3, 4, 5 weeks. This one was 1, 2, 3, 4, 5, 6 weeks, 7, and then we had an outside week down. This was 2021. We were one time framing up here. 1, 2, 3, 4. Okay, 5 weeks. So I think here was probably the best streak of one time framing up back in 2021, before we had that outside week down. Right. Other than that, I don't think there's been, from what I'm seeing, maybe from the COVID dip. Let's see here. 1, 2, 3, 4. Nope. I'm just looking just for shits and gigs, see when the next longest streak was, because I do find that rather interesting. Maybe here. 1, 2, 3, 4, 5, 6, 7 weeks. Back in November of 2019. This stretch right here. This stretch right here. That little stretch was the last time that, from what I can count, we had 7 weeks in a row. Let's see here. Dip. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. 9. Back from coming in from the 2018 dip here, right? 2018 dip, got bought. We stopped the one time framing up, right? And then the last time they did that was took out a previous week low was 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row there. Okay. So that just goes to show you that even when you think the market is stretched, you could continue to one time frame up for another 3 weeks. Okay. So that little stretch right there shows you, that proves that this stretch right here, that whole stretch of 9 weeks, when people were thinking, all right, this market can't continue to go any higher, we'll stop the one time framing down. Even when you came into a balance, you continued to one time frame up several weeks in a row after that. So 9 weeks, this whole stretch here, from low to top, was a 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 week run to the upside. This one here was a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15-week run to the upside. So, I mean, there have been some runs to the upside, okay? That streak right here, though, was most certainly the better streak, and that's kind of what we're looking like right now, right? Dipped. Now we could get a nice 9-week run. Let's get a measured move here. Let's measure how much this market moved from that. Let's go from the low here. I'm just having fun here, just shitting gigs. Let's look here. From top to that week there, that was a 15% move up, right? And then we had that one time frame down, or the one time framing officially stopped when we took out that previous week's low. So 368 points, okay? 15%, 368 points. If we take from the low here and move it up, we've had, shit, son, about a 15% for sure, 15%. But that is 624 points there. So much larger return in the sense of points, but about the same here. So 15%, I'm not suggesting that that's going to be the cause, right? We had a 15% move up into yearly or all-time highs, and then potentially come back into a balance. I'm not saying that that's going to happen, but it is a possibility, right? Nothing's impossible. So maybe, I don't think with that being the only run like that, maybe that's a possibility. Maybe we will come back into some type of balance. This run here was 8%. I just like to look and bullshit sometimes. This run here, that's when we stopped up here, was 9%. So one of the more recent runs was here, and that was one time frame. Stop the one time framing inside week. So we'll take that up to there, 9%. And then, like I said, this one here is a 15% move up. So the last time we've done something like that, or we've had a 15% move up, I'm just kind of measuring. Yeah. I just like to see here. We technically stopped the one time framing. Measure from there. Frame it up. Stopped it. No, continued. So maybe this one, 19% run up. Maybe that's the next biggest one. Did I miss this somehow? So we took a dip here back in 2020 of June 2020. One time frame and down, came back into a balance. The low here was 92.50. The low here was 88.50, but it was an outside week up. So we will take that low. One time frame up, right? Because depending on what your balance was, I guess technically that'd be your balance, but from stopping the one time framing down, right? We will say 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks here. Okay, so this was another 9-week run, and you hit a high at 19%, a 500 or 600 point run to the upside. So about a 20% run to the upside after having that little pullback there. So if we were to have a similar measured move, right, of 20%, that would firmly place us, let's see, just for shits and gigs, right around the 20%. That'd place us around 49.83. So we could continue to one time frame up until about that 4,900 handle. Another 100 points. I mean, very easily could happen. We could even set a longer streak than the 9-week streak there. So it's just interesting to see things like that. I'm just going to kind of want to mark these areas so I know. From there to there, that was one area. And then from here to here was another area. And then let's just, I mean, like I said, I like to look here. It's always fun to me to kind of go back and see what similar moves happened. This one might be one. What was this? 2016. Okay, we had a dip. One time frame down, one time frame down, one time frame down, balance. Got back down near the balance low. Stop. I guess you stopped the one time frame down. I guess if we were to take from the low here, it's 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. Another 9-week run. Something's up with 9 weeks here, huh? Let's say from this low to that high, 12%, 234 points. So they're not uncommon. 1, 2, 3, 4, 5, 6. 6 weeks there. Excuse me. Jesus. 1, 2, 3, 4, 5, 6, 7 week run there, but not as big of a move. It's just, I mean, hell, this is a fun thing to do. Oh, that. Jesus. Bless me. Could this, nope. See, it stops there because you got near that low. 58, 57. Yeah. Oh, no, you held that low. So you continue to 1 time frame up. Oh, shit. This might be another long streak here. What was this? 2010. 2010. Okay. Let's look here. Looks like we had 2 instances. 1 time frame down, came back into a balance, 1 time frame up. So from that recent low, 1, 2, 3, 4, 5, 6. Right? That low is 27, 25. That low was 27. Oh, so you took it out by a tick. I'm not going to count that as stopping the 1 time framing. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row there. A 17% move to the upside. Then you stopped the 1 time framing up, came back into a balance, set a new low, and then began 1 time framing up again. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks in a row there at 15% move. So 12 weeks seems to be the longest run that we've had. And that's as far as back as I can go, 2010. How long was this run here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. 12 weeks there. Another 15% move. So 9 to, let's just say 9 to 15 weeks. 9 to 15 weeks seems to be the long run, okay, of continuous 1 time framing up. And 15% seems to be the average measured move, okay, from what I'm seeing, just going through the charts there. So average measured move looks to be about 15%. At the most, we've seen 19 and 20%. So if we have 19 to 20%, that puts us around that 4,900 level. And then obviously, if this is where we decide to top out, which, you know, keep in mind, if I pull up that monthly balance, look at where we're at, right? We're near that monthly all-time high in an area where I expect to find some resistance. So maybe next week we come back into a balance, right? Considering what we just looked at there, right? So very interesting to say the least. And then the daily obviously continues to 1 time frame up. So very, very interesting. I just like to see that from a weekly standpoint. Now the daily, I'm sure there's been much larger streaks of daily 1 time framing up than that. So 9 weeks seems to be 9 to 12 weeks seems to be the max there. 15% average return on the upside from the low. And yeah, let's see what happens next week. So I think I'm going to conclude this live stream. I do appreciate anybody that does stop by after the stream and checks this out. I find just looking at these charts pretty fascinating, and the fact that I can read them the way I do is pretty unique to me anyway. Not very many people out there in the world know how to just look at a chart and kind of tell you what's going on. So keep in mind, right? Inventory was absorbed, right? Inventory absorbed, being distributed. Maybe that's what we're seeing here around this 4770 level. Would not be surprised to see another bit of consolidation, maybe an inside day here before we stop the 1 time framing up. I know that sounds bearish. I'm not looking for lows here, but I am looking to see if we are going to find acceptance here, right? We've had a pretty large run. We didn't even spend any time at the 4,700 level. So are we going to find acceptance above 4,700 is my question going forward. With that being said, ladies and gentlemen, thanks for stopping by. I hope you all have a wonderful day. Hit the like button on the way out. And